Become your own banker, making 100+% returns. The surprises never end in this financial journey, and here's the best part. You don't need to commit a large sum of money each month to set this incredible wealth-building strategy in motion. Prepare to be captivated by the unceasing revelations that await as we venture into the world of shadow banking. In this groundbreaking episode, we'll unravel the secrets to becoming your own banker and achieving staggering returns, potentially reaching up to 100% or more. It's not about the size of your initial investment. It's about taking the first step on your path to wealth. In fact, simply getting started will propel you towards your financial goals at a pace that might surprise even you. Part 1. The Art of Safe Leverage. The cornerstone of this financial strategy is safe leverage, a concept that distinguishes the affluent from the rest. Safe leverage entails the ability to control valuable assets with minimal personal risk. In essence, it's like owning a valuable skyscraper without having to bet your entire savings on it up front. It's a principle that has the potential to revolutionize the way you manage your finances. Successful investors understand that while taking risks is part of the investment game, putting all your assets at stake is reckless. That's where safe leverage comes in. It empowers you to seize profitable opportunities without jeopardizing your financial security. The power of leverage, when harnessed prudently, can be a game changer. By using safe leverage, you're essentially creating a financial safety net. It allows you to diversify your investments and control a more extensive portfolio than you could with only your existing capital. This means that your money is not tied up in a single asset, reducing the risk of catastrophic financial loss. Additionally, safe leverage enables you to take advantage of opportunities that would otherwise be out of reach, such as purchasing real estate, investing in businesses, or expanding your portfolio of assets. Part 2. Decoding the banking world. To unlock the role of becoming your own banker, you must first unravel the mysteries of traditional banks and credit unions. These institutions have long been the pillars of the American financial landscape. During the Great Depression, while many banks succumbed to economic turmoil, insurance companies remained unscathed. Their secret? They maintained liquid and secure reserves. These reserves, which the insurance industry relies on, acted as a safeguard during economic crises. The 2008 financial turmoil exposed a critical aspect. The major banks in America disclosed that a substantial portion of their liquidity and safety assets were nestled within insurance companies, earning a conservative 4-5% interest. The math was straightforward. Paying out a mere 1% to depositors and earning 5% translated to a remarkable 500% return on investment. This inherent financial strength of insurance companies has persisted through history, making them dependable and resilient institutions. During times of economic uncertainty, your assets held in insurance-backed accounts are less susceptible to the extreme fluctuations seen in traditional financial markets. These reserves also act as a safety net, assuring you that your wealth is secure even in times of crisis. Part 3. The power of safe positive leverage. Here's the real game changer. Safe positive leverage. Becoming your own banker means using this financial instrument as collateral for intelligent investments, all without tying up much of your own capital. This concept revolves around the idea of controlling assets with minimal personal financial exposure. Suppose you spot a lucrative opportunity, such as investing in real estate. With your IUL policy as collateral, you can secure the necessary funding without draining your cash reserves. Smart business owners employ this strategy, which opens the door to a world of possibilities. There are two key ways to borrow from your IUL policy. The first, known as the zero wash loan, charges you nominal interest, typically around 2%, to make it tax-free. The interesting part is that you don't have to pay this interest in cash. It's simply deducted from your policy's growth. In essence, the growth pays for the interest, rendering it a zero-cost loan. The second approach is through an indexed loan. In this scenario, you might be charged a higher interest rate, like 5%, but you keep the borrowed amount within the policy as collateral, which allows you to continue earning interest on the entire sum. If your policy yields returns exceeding the interest rate, the difference becomes your profit. So, you can use the borrowed capital to invest in opportunities that yield substantial returns, ultimately resulting in significant wealth accumulation. Part 4. The power of tax-advantaged borrowing. Here's where the magic happens. Tax-advantaged borrowing. You can employ your IUL policy as collateral to borrow funds at an interest rate lower than what you can earn, all while enjoying tax benefits. Two options are at your disposal: the zero-cost loan and the index loan. The former allows you to borrow without immediate repayments, as long as a nominal interest rate is applied. The latter allows you to leverage your IUL policy with slightly higher interest rates, but the gains can more than offset the cost. Picture this: borrowing $1 million at 5% interest while simultaneously earning 10% or more on your policy. The result? A staggering 100% return on your borrowed funds. This is akin to hiring an employee for $50,000 who generates an extra $100,000 in profits. The tax advantages are twofold. Firstly, the borrowed funds are not subject to income tax, as they are considered loans. Secondly, the interest paid on these loans may be tax deductible. This double benefit significantly increases your investment returns while minimizing your overall tax burden, making it a win-win scenario for savvy investors. Part 5. Doubling your wealth. Your IUL policy serves as your financial foundation, enabling you to leverage your investments while preserving liquidity. You can utilize the funds to seize opportunities, such as real estate, paying only a fraction as a down payment and using your policy to cover the rest. Positive cash flow and potential tax benefits further enhance your wealth. Imagine the possibilities. Borrowing money to invest in income-generating assets, all while your IUL policy continues to grow. The potential for wealth accumulation is exponential. Leveraging your policy allows you to achieve financial milestones faster than traditional methods. When you leverage your IUL policy to invest in income-generating assets like real estate or businesses, you're essentially putting your money to work in two places simultaneously. Your policy continues to earn tax-advantaged returns, while your borrowed funds are invested in assets that have the potential to generate additional income. The positive cash flow from your investments can be used to repay your policy loans or further expand your portfolio, creating a self-perpetuating cycle of wealth growth. Becoming your own banker isn't just a concept. It's a powerful financial strategy employed by the wealthy to achieve exceptional returns. That serves as a powerful financial strategy that enables you to make 100% returns or more. With a firm grasp of safe leverage, a well-structured IUL policy, and a penchant for tax-advantaged borrowing, you can chart your course to accumulate substantial wealth and ensure a brighter financial future. Thank you for joining us on this insightful journey of discovering the key differences between the secrets to becoming your own banker and achieving staggering returns, potentially reaching up to 100% or more. If you found this information valuable, please remember to hit the like button, share this video with others, and subscribe for more financially changing content.